This is Oliver Slope with Blue Line Futures, coming to you from the floor of the CME here in Chicago with their livestock roundup. And we're seeing a little bit of pressure coming to the market, and I think a lot of that is probably just some position squaring going into tomorrow's cattle on feed report. We know that we've had a pretty good rally here over the last several months in the live cattle market. Not only that, but we're starting to see cash stall out a little bit. 116 here earlier in the week. If we come in steady, remember, those February futures are still at a premium, so there's room to work a little bit lower on that front. On top of that, we're coming into a pretty seasonal trade here. 14 out of the last 15 years is the trend. If you'd sold on November 27th and bought back on December 11th, you were profitable. Again, 14 out of the last 15 years, an average gain of about 270. So we have technical resistance, position squaring, and a little bit of a seasonal play. I think this is a big headwind going into the weekend for the bulls to overcome, and I wouldn't be surprised to see a little bit more pressure on the market for that February contract. Big support, 123.50. A break and close below there, I think, really opens the floodgates at 120. And obviously, we might not see that until next week, pending on tomorrow's cattle on feed report. So a lot to look forward to in tomorrow's report. We'll see where that takes us going into next week. On the feeder cattle side of things, it is continuing to break down a little bit more as well. For that January contract, 142.50 to 143 is the pivot pocket we're looking at. This is previously important price points, but as well the 50% retracement from the contract lows to contract highs, a break and close below here, and I think there might be another $3 to $4 of downside risk closer to 139. Now, wrapping things up with the lean hog market. Lean hogs, I was so excited that they were able to fill that September 11th gap earlier in the week and springboard off of that with some conviction, but we did not get any follow through yesterday, which is totally brutal. On top of that, we had good exports this morning and weren't able to get any follow through on that after a pretty decent open. So a lot of caution flags still lingering, and I know that now that we've been down for, I think, 6 consecutive sessions now in a dramatic fashion, wouldn't be surprised to see margin departments and risk departments maybe forcing some selling here from buyers at higher prices. Now, the bottom side, 63.70 is those lows from earlier in the year. That's going to be the target to look at. We are near oversold conditions, close to those contract low oversold conditions. So I think 63.70 will be a good spot to maybe try and nibble again. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.